Mess this one thing up when buying a new construction home, and you might be in a world of hurt, have some massive sticker shock, and be left with tons of questions when it comes down the line that you don't know how to answer. Curious about what it is? Let's get into it. I want to talk to you about it today. So here's the biggest thing. Here in Texas, one of the things that a lot of people may not know or may not realize if you're moving from out of state or if you're buying for the first time here in Texas is we pay a lot in property taxes. On average, most new neighborhoods here in North Texas average somewhere between 1.9 and 3.1% when it comes to your property taxes. Now that includes any, mud or PIDs, which are basically improvement taxes or anything that help put the development together. All in all, it all comes together, like I said, on average, somewhere between 1.9 and 3.1% of property value. So what that means is in your monthly mortgage statement, you have your principal, interest, taxes, insurance, all of those things are built in, and you pay that into escrow. Now, here's where people get mixed up and messed up. And if you don't get this part right, it's going to be a little bit chaotic for you. So when the county does the assessments on your property, they assess it for the value, right? And the value is different. What the assessed value is different than what you probably paid for it. And we'll get into that in a minute. But before we get to that, I need to tell you this part. So if there's nothing built on the land, they can't assess the land for the value of the house. All they can do is assess for the value of the land. Let's call it 30 or 40 or 50 or whatever. Let's call it, $45,000, right? So what the county does is at the start of the year, they go in and assess and say, oh, this little cut out piece of dirt we think is worth this amount of money, and there's not an improvement on it, right? And then a builder comes in, builds the house, you close on it in the middle of the year or whenever, really excited, and it's all well and good. You pay the property taxes for that year, and you're like, oh, this was really not that bad. It's great and it's wonderful. And then what happens is the next year rolls around and the county comes back and does their reassessment and says, oh, wait a minute, there's a house here now. We need to change our value. And you see your property value assessment go from like $40,000 to like $440,000. And now you're paying, 2.4% on 440 instead of 40. And there's a massive gap there, right? And so what happens is if you don't have that money already being put into your escrow account, you're going to get a letter from your mortgage company that says, hey, Mr. and Mrs. Homeowner, we're so glad that you own this home. By the way, in case you didn't know, your taxes went up and you're short. So starting next month, we're going to up your payment by $900 to offset the shortage in your escrow account so that we can pay your property taxes. A lot of people have that happen. It's a massive sticker shock. I don't want that to happen to you. So here's what you need to make sure you do. When you purchase a new construction home, whether you build it or whether you buy it off the builder's inventory and you work through the financing. Now, if you're going with cash, this is a different conversation. But when you're working through your financing with your lender and with your realtor and you're talking about all those details, make sure your lender is calculating your escrow account based on the improvement of the land, not just the land itself. A lot of times what I'm seeing happen with some builders, and this is not all builders, some of them honestly are really good at making sure this gets played out the right way. But some of them, in order to try and get people in the door, their lending departments are calculating monthly payments only on the basis of the initial taxable value. So they're showing you these payments that are $600, $700, $800, $900 lower than what they should be to get you in the door. You're getting in, you're living in the house, you're not thinking anything about it. 6-8 months rolls down the road, and then they're calling me and they're like, well, what happened? Like, what did we do? Well, they didn't calculate for your taxes. So we want to make sure this is post, we're under contract, we're getting ready to go under contract with the builder. We want to make sure as we're working through that lending conversation that they are figuring out your escrow account based on the improved value of the land. Because what I don't want you getting, I said, is getting that sticker shock letter, because at the end of the day, it is still your responsibility to pay it. I would much rather you just know that on the front end and start making those payments accordingly based on what it's probably going to be. And here's the thing, it's a guess, right? Like they're not going to know for sure. They can kind of get relatively close. So you might be short a little bit, or you might have an overage of a little bit. But at the end of the day, I would much rather you be, $10,000 closer to what they're guessing than be $400,000 off. And get that money, not be surprised by that. Second piece of this too is at a certain point, if you have an escrow account, where they're holding for your taxes and your insurance, there's a good chance some years you might get like a random check in the mail from your mortgage company. And it's like, why did they give me this money back? Well, if you end up with an overage, there are regulatory rules that us say, hey, how much over you can be and how much short you can. There's all these things. So if you end up too far over, they send you a check with that refund. Do not spend it. Just put it in a separate savings account, because I'm almost certain as soon as you put it in the savings account, they're going to recalculate and they're going to be like, oh yeah, by the way, now you have a shortage and we need to get that back. Put it back in and refill that account to pay your taxes and your insurance. So I can't tell you what the county is going to assess your home for, but I can tell you as soon as that calendar year rolls off so if you buy the house in 2024, 2024, you're going to pay taxes on only unimproved land. 2025, you're going to pay taxes on land plus structural improvements. So just put it in your head, be mindful, and start, paying into that escrow account accordingly so that you don't have sticker shock. You also might end up with some sticker shock if your homeowner's insurance rate changes. I know here in Texas, we're seeing a lot of rates kind of fluctuate and go up. I'm not an insurance agent. I can't tell you why, but as everything is, we're seeing it all go up. So if you shop your homeowner's insurance every year and your policy goes up, that might cause a shortage or a deficit one way or the other as well. So you're going to have to come up with that. But again, the biggest piece of it is the tax side. The property tax side is, some people are putting $600 to $1,000 a month in the account to fund their property taxes. Now the question is, hey, do we have to have an escrow account? Yes, you have to have an escrow account unless you put down 20% on the value of your home. Then the escrow account is optional. And at that point, I want to have the conversation with you of like, hey, do the thing that makes the most sense. If you have 20% down, or, and we'll get to the in a second, you don't have to have the escrow account. You just need to be responsible enough to know that, hey, we need to be putting money aside every single month. And then you're responsible for paying your taxes and paying your insurance when that comes up. So here's the you either put 20% down or you have a 80% loan to value ratio. So let's say you put 5% down and in 3 years, your home has appreciated and the house is worth more, which we expect that it should be. And then at that point, you call your bank and you work with them on how to close out your escrow account, hold that money for yourself and pay those bills accordingly. But you have to be responsible and diligent to do that. So I don't recommend that for everybody. I do recommend just, for the most of the part, makes it easier, just pay it into your escrow account. But always make sure when we're going through the lending process with the builder's lender that they are calculating for the improved value on your taxes. And like I said, getting close to that value and you're paying into that account accordingly so that you're not hit with the letter of sticker shock that you have a shortage in that escrow account. When you close on that home, as is with the case of any, whether it's resale or new construction, the builder will give you a credit for the amount of time that year that they held the property for their version of the taxes. So basically here in Texas, what we do is they figure it on a 360 calendar day. They take the big number that they say the assessed value is, the taxable rate, and divide it by 360 and then multiply that by the number of days that the builder held that home for the year. You will see that as a credit on your closing statement. And then at the end of the year, you will be responsible for the full amount of those taxes. It's a lot. I get it. Trust me, every time I see that check be written, it makes me cringe a little bit. But that's kind of one of the things that comes with owning property in Texas. Last couple things I want to tell you as we talk about these things, and I don't want you to be surprised. I should have some full transparency. Number one, Texas is a non-disclosure state, which means that you do not have to tell anybody that was not involved in the transaction how much you paid for that house or for that property. There's a good chance that once you close on that brand new home here in Texas, you're going to get an official looking letter from your county, Collin County, Denton, Hunt, whoever it is. And they're going to say, hey, we're so glad you bought a house. Would you please tell us, would you fill out this little form and tell us how much you paid? And you're going to take that piece of paper and you're going to light it on fire. You're going to throw it away, or you're going to shred it, or you're going to do whatever you want to do with it. You don't have to tell them. They can figure it out on their own. They have avenues of ways to do it. Make them work for it. You don't have to tell them, because the moment you tell them, they're going to, change your tax basis based on what you tell them. Also, same vein, if the county assessor, sends you your letter and says, we believe the value of your home is $340, and you're like, but Zach, I paid like $420. Shut your mouth. Like unless you just want to pay more in taxes, don't call them and say, oh, well, we paid $50,000 more than that. What you think it is. Shh, just be quiet. Say, yep, that's what y'all think it's worth. We will pay taxes at that, and leave it alone. On the inverse side, for the first year, and this is the easiest to do on the first year. For the first year, if the value is way off in the opposite direction, so let's say you paid $350 and they assess it at $390 or whatever. The first year with a new build, you can kind of go back to the county and say, look, here's what we paid for it. Here's our documents. Here's actually how much we paid for it. This is when you would tell them, and most of the time they will adjust accordingly based on what you paid for if they assess higher, like if the assessment is higher than what you actually paid. If it's the other way, just be quiet. It's all good. Don't give them any more money than you have to. I mean, I guess unless you just really want to, but that doesn't make any sense. Also, people always ask, what's the homestead exemption? How does that work? What does it mean? As soon as you buy your property and as soon as your driver's license matches your new address. So if you're moving to Texas, you got to go deal with the DMV, or you're moving within Texas, make it match. It's like a one-page form. You can find it on every county's website. They look all the same. And this is a homestead. And basically what this allows you to do, if this is your primary residence, this is going to allow you to remove, we just upped it. It's $100,000 off the taxable value. So if they're saying they're assessing it $340, we're dropping it $100,000, then you're paying 2.4% on the lower value for your school district taxes and things like that. On average, it's not going to save you thousands of dollars. It's going to save you a few thousand a year, but we want to make sure you do that. You should have to only file it once, and you can only carry it on one property. So it needs to be carried on your primary. Make sure you file that. Make sure you get all that taken care of. And like I said, I don't want you to get caught holding the bag and being like, oh, we didn't know because Zach told you. Like I told you. I'm trying to be helpful and provide that resource to you. If you have questions or you're looking to buy property here in DFW, my team and I, we specialize in new construction. That's what we do in the real estate market all across DFW, from Waxahachie to Sherman, from Rockwall to Aledo and everything in between. We are the new construction team to help you. So if you have questions, you have comments, drop your comments down below. If you have questions, our contact information is going to be right at the bottom of the video. You need help. You want to help buying property, you need to sell, whatever. We want to be able to help you with that. So biggest thing is I just don't want you to get caught and have this moment of having to pay more. I mean, granted, you're going to have to pay it because it's yours, but I don't want you to be surprised by it when it happens. So make sure the lender sets up all of that to do it the right way the first time, because if they're not, you're going to be in trouble. And it feels kind of scammy when they're trying to, show you one thing and it actually becomes something else. So if I can help in any way, contact information down below. Reach out if you have questions. We would love to help you. Thanks for hanging out with me today. Hope this was helpful. I will see you in our next video. Bye for now.